Jeff, so good to see you. Today, we're going to start with an important question. Are you taking on too much risk? We have 4 signs that you might be. Risk isn't just about numbers, it's about how you feel when those market conditions change. So let's talk through 4 signs that you may be taking on more risk than you should. Number 1, you check your accounts constantly, but how often is too often?
Hi, Erin. That's exactly right. For most people, I would suggest don't check your investments more than quarterly.
Okay.
When you have a good financial plan built around your risk tolerance, volatility is really built into the plan. And checking your accounts too often can cause lots of stress, cause you to make emotional decisions, which are typically the worst thing that you can do. So this chart shows that. It shows the roller coaster of investor emotions. Markets go in cycles, ebbs and flows. When the market's going up, there's this natural high, this natural dopamine that kicks in. And when the market's at its highest, it's actually the most risky point in the market. But after it turns and it starts to drop, when there's a correction, emotions turn a little bit darker, and people start to get worried, fear kicks in there, and panic. And for some people, they want to sell at that point. They decide, I can't afford to lose more than it's already down. But that is actually the best buying opportunity. So the point is, don't let emotions dictate your investment decisions, because emotions will tell you to do just the opposite of what you should be doing from an investment perspective.
Yep. Have to keep in mind that we are humans. We are emotional beings. Next, ask yourself, do you lose sleep when the market drops? That being said, though, Jeff, sometimes it's really hard to tune out the noise.
It is. The news and the media are trying to get your attention,
Yeah.
and they always seem to overreact to the market ups and downs, especially the down. And they won't get good ratings if they portray it that this is a reasonable and normal part of market volatility. So they're trying to get the eyeballs and the advertisers. So first of all, you want to have a portfolio that's really designed to weather the ups and downs of the market. But also, you need to have confidence in that strategy, and don't pay too much attention to the news cycle. Emotions, again, will sabotage your strategy. And they can also make you a really miserable person to be around. So it's important to have someone that you can talk to. And that's what an advisor can be as well, a sounding board for what's going on in your mind, to make sure that you are making good sense of what's going on in the markets.
Right. And because these are all related, this brings us to number 3. It is worth repeating, though, of course. Third sign you're taking on too much risk. You've made panic-driven decisions before. As we talked about, if this looks like you buying high and selling low, you are investing emotionally.
That's right. If you have an urge to do this, you may not be in the right type of portfolio to begin with. So it could mean you indeed are taking on too much risk, and you need to look at other strategies if you've had made poor decisions in the past. So, but the markets run in cycle. Just in 2025 alone, that calendar year, in April, the stock market, the S&P 500 was down about 15%. And I took a lot of calls, people that were panicky, and for the most part, it's there's nothing that would cause us to make a change in your portfolio plan at this point. And the market made its rebound. By the end of 2025, the S&P 500 was up over 16%. So again, don't panic. Don't let emotions dictate your portfolio.
Yeah, that's such a good reminder. And what I heard during that low point in 2025, Jeff, over and over again, I'm sure you did too, was, but this one feels different. And it always feels different, but data backs up what you're saying, Jeff. All right. Last sign, of course, you feel pressure to chase those returns, AKA FOMO.
That's right. The fear of missing out, again, is an impulsive or emotional desire to follow the trends in the market. You see a hot stock or a hot mutual fund that's soaring like an eagle right now, and you say, I don't want to miss out, so I've got to jump into the market or jump into that stock at that point. But every mutual fund has a prospectus and a statement that says, past performance is no guarantee of future success. And if you're jumping into a fund after it's already increased in value, you've already missed out on some of the best returns with that fund. So that's why a disciplined approach with investing is the most important thing.
Right. So then how can working with a financial advisor help us stay in line with our risk tolerance?
So a good financial advisor will help develop a diversified long-term plan that really
Right.
aligns with what your financial goals are to help you achieve better financial success over the long term. So they'll ask you questions, they'll interview you, there'll be questionnaires to really determine what is an appropriate risk profile, what is an appropriate risk tolerance for you. And then education, clarification of the things that are going on in the market or what they can assist with. But one of the big things is to keep you from making huge mistakes driven by emotional decisions that can cost you dearly in the long term. So through review, through communication, they can sit down and walk you through life's changes as well. If your situation really has a change, divorce or a spouse passes away or those types of life events, it may be appropriate to make changes to your portfolio,
Right.
but they can walk you through those things to, again, to help you to find long-term success with your
Right.
investments.
Right. When we have a plan that is in line with our risk tolerance, we are more comfortable and just we have faith in the plan, which is so important for that long-term success. Jeff,
Yep.
if somebody would like to sit down with you to create that plan that is in line with their own unique risk tolerance, what's the best way to reach you?
Absolutely. Give us a call at our office. It's 405-681-9633, or they can go to our website, gortonfinancial.com, and browse through there and click on the contact information, and we'll be in contact with you.
Great. Jeff, thank you.
Thank you, Erin.